Good morning and welcome to today's morning report on Friday the 24th of July with me, Rich Perry, market analyst at Handset Markets. European trading session is, well, got off to a mixed start actually. Well, I say that. It was lower, it's now bounced. But still I think the market sentiment is fairly negative coming out from the Chinese flash PMI data that came out this morning. It was expected to improve to 49.7, but it actually fell away to 48.2. So that suggests that the Chinese recovery or the Chinese economy continues to drop away, continues to disappoint, and this is certainly going to have an impact across commodity prices, which are already under significant pressure. Gold price, for example, came sharply lower on the back of that data this morning. So the sentiment generally has turned sort of risk off or risk averse, as it were, and the dollar is far stronger in terms of currency markets today. And let me just show you how this is impacting across dollar index, which has sort of recovered much of the losses that it saw yesterday. So that is a positive. But I mean, you look at these these commodity prices. That's the WTI oil continues to fall away, although slightly higher today. I don't think it's going to last. I think it's going to just be another sort of intraday bounce that gets sold into. Look at the copper price. The copper price is well below its January lows and is now again at multi-year lows. So really commodity prices are under pressure, and gold is one of those that I will focus on in a bit. But certainly today that whole rout in commodities is sort of continuing. Really, it doesn't look great at all. In terms of forex markets, as I said, dollar strength is playing out across the majors. The Kiwi and the Aussie dollar are the major pairs that are under pressure from that Chinese data. Really, the Aussie dollar or the Aussie economy certainly is very closely tied to commodities, and also the amount that China buys off them. So that is a big impactor. When Chinese data disappoints, the Aussie gets hit, and that certainly seems to be the case again today. So what about the economic announcements? Well, we've had the Chinese PMI, but we've also had the Eurozone flash PMIs as well. They've all disappointed. Germany, France and the Eurozone data all disappointing, all missing estimates, and that again is not going to help matters either in terms of risk sentiment. In terms of the US, we've got the US data at 2:45. Unfortunately, my chart from Reuters doesn't show anything in terms of data, so I can't really show you, but we do have estimates, and that's due to come in at 53.6, so slightly up from 53.4 on that data last month is the expectation there. Also, we've got new home sales this afternoon, expected to come in line, no growth at all. Around about 550,000 is the expectation there, which would be no growth. But considering the strength of the housing data we've seen recently, I'll be very interested to see if that data comes in higher than that. So that takes me to my chart of the day, which today is the DAX. Now, what we have seen in the DAX recently is this sort of rally falling over. This is the rally, or on the hourly chart, this rally that we'd see, that 10-day, or is it about 10 days, I think, or 10% rally that came across the course of about sort of 10 or so sessions in sort of the last 2 weeks, has rolled over, and it certainly looks as though it's turning more corrective. Now I'll show you on the daily chart, because on this daily chart I've sort of redrawn a few the fib levels to take account this December to April rally. December 921.6 up towards the all-time high at 12.389, and you can see here on this chart that the Fibonacci levels perform a very strong function here, 23.6% and also 30, unfortunately that is annoyingly covered it, 38.2% also hitting the lows. So 23.6% and 38.2% seem to be consistently used as turning points in this chart. So I think that the fact that we've now cleared away from 23.6 looks like we're probably going to be coming back towards 38.2, and that is around the 11,170 level. And again, that is a key support in the reaction low that we saw in May. So it looks like the DAX is coming into a little bit of a corrective phase. So we'll see that here play out. I think on the hourly chart we've got here, and it certainly looks like it's in a bit of a corrective phase. Look at the 21-hour moving average, which has been a pretty decent gauge through this recent weeks, actually rolling over and finding resistance. So the little rally that we've had today doesn't necessarily look as though it's going to be much more than an unwinding rally before further selling pressure. You've seen the hourly RSI just unwinding for a bit oversold. A little bit of a bullish divergence, interestingly enough, on RSI and stochastics, but I still think that it looks like this is likely to be more of a bounce that gets sold into. So I'm still expecting further correction now. You've got the support that comes in initially at 11,415 area, and also that gap there at 11,340 as the support. In terms of the upside, well, you certainly talk about this 11,530, 23.6% level of this bull run that we've seen in the last couple of weeks, but also the reaction high that we've got 11,615 as well. I think this is still in a corrective phase, and I'd be looking to sell a rally. So I wish you good luck in your trading on DAX today, and I'll speak to you later.